Intel stock investors have destroyed AMD and Nvidia stock investors this year. And that's such a crazy thing to say. But if at the beginning of the year you invested $10,000 on Intel, it would be double that, roughly $20,700. AMD would be roughly 18.1 thousand and Nvidia would be roughly 13.1. Now, obviously, this is year to date, and some Nvidia and AMD investors like myself would be, well, let's look at the longer time frame, right? If you look at the 5 year out process, the story would be a little bit different. But this does kind of indicate why it's crucial to kind of look at companies and their valuations as well. It's not just about who's the best player, but who is the player with the valuation that doesn't make sense. Now, in today's episode, what I want to do is take a closer look at some recent news impacting Intel. And if you are an Intel stock investor, you're going to learn a lot of what the company has to say. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so Intel right now is sitting at $42 with a market cap of $200 billion. Now, Intel is a stock that I don't own. I usually joke around in this channel saying that it's your favorite semiconductor stock, but your favorite semiconductor stock has outperformed in the past year. Now, previous episodes, you can go back to all my videos. I've talked that this at 100 billion, anything 100 under 100 billion was that valuation where if things started to look good, there is a multi-bagger opportunity. Just for me, it didn't make sense, but I just wanted to kind of share my original thoughts. I don't think the story has shifted just yet, but we are getting even better and better news. Obviously, the US investment, Nvidia investment, you're seeing some progress in 18A, you're seeing some progress in 14A. What we still need to hear more, but that's what we're going to look at what they had to say at a recent conference. So on December 3rd of 2025, Intel was at a UBS Global Tech Conference, and here are 7 things investors should know. So what was the overall market watching? What were we trying to listen to? The first thing is any updates on yield progress, right? So they are focusing right now on 18A. What are the yields happening there? The other thing is, how is 14A moving? Is that moving along? Any new customers? Next, we also kind of wanted to learn more about the manufacturing split. A lot of things are happening outsourced right now, and it hurts margins a lot for Intel, right? Even though they have their own manufacturing stuff, a good amount of outsourcing for certain chips are actually going to TSM. And then just evidence of the turnaround story for Intel and their foundry business. So thing number 1, though, that we learned was supply constraint. There is a supply shortage and a queue everywhere. Intel is currently under shipping demand across both client and data center segments. They mentioned they are short about everywhere, in 7 nanometer and 10 nanometers now are most pronounced. They believe the peak supply shortage will happen beyond Q1, but peak is going to happen in Q1. It will persist beyond Q1. So that's why actually right now, Intel, they mentioned during their earnings call, they're shifting where they're using most of their wafers, right? They're eliminating maybe some of the low margin segment in the consumer and focusing it more in the data center side. So that was pretty interesting. Now, the other thing within the demand shift, so this is still number 1, is hyperscalers are ending their refresh pause to update aging 5-year-old fleets. So in the CPU market, you usually tend to have some pauses, and these last a lot longer than GPUs. But right now, things are shifting. Hyperscalers are reinvesting in CPUs, and that could be a nice refresh cycle for their CPU products. The most important thing is power efficiency. New servers are roughly 80% more efficient in forms of just CPU to performance and power basis compared to 5 years ago. And with AI inference putting this unexpected demand on traditional infrastructure as well. So while Intel is not competing here in the GPU space, they do have a CPU business, which unfortunately is being eaten up by AMD. But regardless, the demand is still pretty strong there for the supply that Intel has. Now, number 2 was progress on 18A. So Panther Lake milestones have hit and critical execution Proof of point was that they were going to have the first SKU shipped by year end, and that is happening. So they shipped their first SKU of Panther Lake. So showcasing some progress here in 18A. Not only that, they are now in a position where they're seeing predictable improvements month on month that is in line with what you expect as an industry average. So they're improving their yields on 18A, which means that in the future, you should see margins as they start improvement a little bit. Every time you see those yields improvement, they're able to ship more chips and they're going to be able to make more money per wafer. So that's pretty exciting for their 18A. Now, before we go anywhere, make sure to hit the thumbs up and the subscribe button. We're trying to hit 85,000 subs by the end of the year. We're hoping for the Santa rally to get us there. So make sure to hit the thumbs up and the subscribe button. Now, if you want more than YouTube, you want to join the inner circle. Deep dives on semiconductors and AI stocks. You get these slides as well. You get monthly live Q&A. You get a community of serious investors. There's even AI agents. Right now, we have an annual subscription of 33% off right now using the code CYBER. This code ends in about 48 hours. So make sure to use CYBER to join the community at whatthechiphappened.com. Now, thing number 3 is 14A, right? This is the next stage of their foundry business. And they mentioned 14A is ahead of schedule. Development is meaningfully ahead of where 18A was at the same stage. So that's definitely pretty great to see. The other thing, their PDKs, which is what helps kind of develop what external customers use to build these chips, are just much easier to use compared to what they saw with 18A. And the main reason, right, was 18A was optimized for internal use first, and external engagement began only during the development phase, where 14A was a little bit different. It was optimized for external foundry, for external customers. So external engagement began during the definition phase. And a lot of players that is a little bit more bullish indication that they can get more customers here on 14A. Now, right now, one thing that they want to do is insourcing logic. Production is coming back home. In Panther Lake, they want roughly 70% to be internal logic. And Panther Lake marks the inflection point, moving from nearly a fully outsourced back to internal fabs. And if you're bringing it back, you're going to be able to do more and more margins improvements. Now, financial impact. There is an absolute growth with this kind of moving and insourcing the logic back is positive. It is positive to bring wafers as they move to Intel. A is very accredited for Intel's foundry margins and should also theoretically help their client business as well. Currently, external wafers for Arrow and Luna Lake acts as a pass-through cost with lower margin capture. Now, this is also something that's pretty exciting. So Intel has the foundry business and they have the manufacturing foundry business, which many people just look at the wafer side, but they are seeing some nice movement in advanced packaging. So there is moving from this tactical spillover for TSMC's CoWoS to EMB, EMIB adoption, which is a form of advanced packaging that Intel has. Is kind of the competitor to CoWoS. And Intel, and we're going to look at some news later on. Intel is mentioning that in the second half of 2026, they expect this to see some revenue ramp up. So overall, strong there. Now, margin thing number 6 is margin dynamic. Um, like I mentioned, they're really focusing on supply constraints right now. So there has to be a balancing act. So right now they are prioritizing, like I mentioned earlier on servers and high-end PCs. They are de-emphasizing in low-end market. They are pricing, right? They're rising low-end prices, but shaping demand for Arrow Lunar Lake. So overall, they're trying to have this balancing act here on the margins. I do believe, and I am excited that they're prioritizing on the higher margin side, which is server and high-end PCs. And even if they lose market share, they lose market share on the lower end market. Maybe they might be losing a little bit to maybe AMD there. They might be losing to ARM, Qualcomm, right, who's trying to enter the PC space. So that's where the loss would happen. But remember, these are portions that have lower margins, and it makes sense. It makes perfect sense to just focus on those higher margin business. Now, the final thing, and this is what we've heard in various earnings and conferences as well, is leadership action. New leadership, so Lee Bhutan, the new CEO, is completely changing the org business. And management layer has gone from like 11 down to 5. That's very important, right? Because if you have 11 people that are, if 11 managers, right, in total, if one manager and then another manager, every time you go to a manager, you tell them 10 things that are right, and you always tell them like one or two things that are wrong. Eventually, by the time you get to the top manager, it's like nothing is wrong because you never want to just give all the bad news. So it's like, you know what, everything's moving okay. But by flattening that, you make execution, you make the understanding that you can get a lot more information a lot quicker, a lot of easier to make the decisions as well. So this leadership action is a cultural shift for Intel, and it is something that it is crucial for the long term, but I don't know if we're going to see any major impact right away. So overall, engineering elevated, customer focus is where Intel is trying to be in. So the bottom line, the bull case is execution is definitely there. Panther Lake is hitting milestones. 14A is ahead, and manufacturing is stabilizing. The bear case is obviously shortage in wafers. Not only that, right? The bearish case is they still haven't announced a major customer for 14A, and that has to be crucial. But with with the way things are moving, at least there is some positive data that could show there is hope there, right? So what to watch in 2026? We're hoping to see some fabless customers to commit to 14A or maybe 18AP, which opens in later in the next year, and then obviously just continue improvements of yield ramp in 18A and just more progress on 14A. And if you want more analysis like this, you would find a lot more in my community at whatthechip.happened.com. Now, a few things that I want to showcase here are just some charts, and these charts are possible by fiscal.ai. If you want great charts, make sure to use my code fiscal.ai/Jose for 15% off. But in this AI boom, Intel is not really seeing much growth, neither in their data center side, neither in their client side. So while things are looking good, I would say in the short term, I don't expect much revenue growth anytime soon. So that's something that at least for another year before we really see a transformative business, in my opinion, for Intel in forms of revenue. At least on the bullish case is you don't see much bleeding anymore. It seems to be a little bit of a U-turn happening, but the growth rates that we might be seeing in other companies is not what Intel is seeing right now, and I don't expect it to see. The final thing is Google. Their TPUs have gotten a lot of attention. Google's TPUs have gotten a lot of attention, and investors are saying that this is the end of Nvidia. I've talked a little bit about it in the past. But one thing that I've mentioned is there is a mass, you can't just build new chips, right? You can't really do that because there's a bottleneck in manufacturing. For example, there is this Google may have to wait to ramp up its TPU output as TSMC's call was advanced packaging won't substantially increase until 2027, media reports. Adding Google's TPU chip output will double at that point. TSM CoWoS is the key bottleneck for Google's TPU right now. But then you're also hearing rumors that because of these bottlenecks, Google is actually looking for another foundry player that could do some form of advanced packaging. So Intel is rumored to power Google's next gen TPUs with its EMIB packaging as technology gains massive attention across the AI industry. Now, remember in the presentation, we actually saw that they did have a nice amount of movement over here from TSMC's CoWoS needs, and they expect some revenue in the second half of 2026. So obviously, if you hear a form of announcement that Google is using Intel for advanced packaging, even if though it's not a massive revenue grower, it's still going to be something that can create a nice bullish sentiment for Intel and their foundry business. And then it's like, hey, if Google is using Intel for foundry, maybe I should also look at it. And then that partnership can grow even more and more. So that's definitely something that investors should keep a closer eye on. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.